Hi traders, welcome to the markets in three with me, John. I'm just going to check that the audio is working. The markets looks like it is fantastic. So let's take a look at some markets to have a look at. It's been an interesting week that we've had. I'm currently in a Euro US dollar long position, so I'm going to talk you through that. The title of today's stream is Easy Trend Following Strategy for Beginner Forex Traders. So this is almost part and parcel of that title in terms of I've took this trade using a very simple, easy to follow trend following system. But before we get into that, I just want to explain what is going on in the markets and what to potentially look out for. So it's been a very, very interesting week. I'm going to start here with some data from News Squawk, and then we're going to move into some other little bits and pieces just to kind of explain my theory of why I think what is happening is happening. And then we'll go into a little bit more detail of the trend following strategy. And then I'll show you how I place this position on Euro US dollar. So looking at the News Squawk daily European opening news for today, we can see there's some really important data here. So the first thing that I noticed, it said US Treasury Secretary Bessent said they will implement unprecedented measures on Iran and are conducting a maximum pressure campaign against Iran. So when last week we were thinking about, potential deals coming within, Wednesday, Thursday, that never came around. That's why we're seeing Brent a little bit higher at the moment. And yeah, you can see here it says crude futures struggled for direction following the prior day's choppy performance amid light headline news flow and a lack of major geopolitical developments. But yeah, that doesn't sound like a deal is necessarily on its way, does it? We also saw that we had the S&P 500 hit fresh record highs. The Nasdaq broke out, which we spoke about yesterday, for a potential opportunity that continued to move. DXY marginally softened overnight. 10-year US Treasury futures took a breather after a recent bull steepening on the softer than expected PPI data. So what we're seeing is bond yields falling at the moment, which is good because I'm looking for some US dollar weakness in the market. We also had some other data as well. We could see that the BOJ is reportedly set to raise interest rates as soon as September and is also considering accelerating subsequent hikes, according to reports. So we're starting to see a little bit more aggression out of Japan too. And I'll go show you that chart and potential breakdown of US dollar yen as well. On Thursday, Bloomberg reported that Japanese PM Takachi's government is said to support a faster BOJ rate hike, while market sources say the BOJ could raise rates in September or October. So a little bit more aggressiveness coming from the Bank of Japan now, which is super interesting. If we go take a look at I just deleted it off the screen there, but if we go take a look at the key data that come out this week and how that's impacting markets, we can see that there's been some really crucial data. So if we take a look at the RBA on Tuesday, we can see that they held interest rates at 4.35% as expected, but were a little bit more bullish or hawkish in their monetary policy statement, where they talked about potential keeping interest rates higher because their battle with inflation isn't over and inflation is in a place where it could still need some further tightening. So like the Australian dollar longs at the minute, especially against the likes of the US dollar. And I'm going to explain why. Because if we look at what happened in terms of inflation data this week, super interesting stories. So if we look at the US dollar CPI and the core CPI, we can see that everything came in as forecasted, a little bit lower on the core CPI front. Core CPI came in at 2.5% versus the previous 2.6%. But still above that 2% target range, which is not ideal. CPI year on year showing a little bit of downside too, came in at 3.4% versus the 3.5% previous, but came in as forecasted. That was what the expected number would be. But either way, inflation is coming in a little bit lower, but just still not as aggressively towards that target range. But in terms of other inflation data, core PPI month on month fell to 0.2% versus 0.4% previously, and PPI month on month was 0% versus the minus 0.1% previously, but well below forecasts of 0.2%. So on the sort of core PPI front, which I think is actually a very, very good marker of what could potentially happen for inflation rates going forward, we saw a decline. And from that, we saw US bond yields fall aggressively. Now, today could be another kind of precursor into how inflation games could play in the US. We've got core retail sales month on month and retail sales month on month later this afternoon. And we can see that it's forecast to come in a little bit above previous at 0.2% versus minus 0.2% that we had in the previous month. So we could see a little bit of dollar bullishness if we were to see a big miss to the upside there. On the labour front, we had unemployment claims coming in, and that came in worse than forecast. So we saw a forecast of 202,000, but it came in at 209,000, 200K jobs on the previous. So it just basically showing us that more people are claiming employment benefits in the US. So as we kind of continue to go on, dollar data continues to be on the little bit more of the poor side versus actually on the good side, right? So I like the idea of US dollar weakness because this inflation data is showing us that. Plus, US bond yields have been falling. So I like the idea of selling US dollar. So I've been buying Euro US dollar this week. If we take a look at the currency strength meter, just to see how things have played out this week as well. So one of the key markets to look at was the Japanese yen, strongest currency at the moment. But the Japanese yen has just been kind of sideways this week after we've seen some really aggressive strength over the past couple of weeks. Australian dollar is next, and the New Zealand dollar is in under that. If we look at the weakest currencies, we have the Swiss franc at -7, US dollar at -3, pound at -3. But I like the idea of basically looking at Aussie US dollar longs. Anything against the US dollar, I'm pretty happy to look for longs on. And obviously, Euro US dollar is the proxy of the dollar index. So really speaking, if you're looking for dollar weakness, buying Euro dollar is the thing to kind of look for. And that's what I'm doing over here, right? And I'll go and explain that in a little bit more depth. Before I get into that, I just wanted to check out the CME Fed Watch tool. If it loads up here, let me just refresh the page. Because we've seen some real, developments in the pricing of what's happening in the bond market, right? And this is super important. If you're a Forex trader, you need to understand the bond market because that is what's going to drive yields, and yields drives currency appreciation or depreciation. And that's what we're going to be looking at consistently. Now, if you look at this CME Fed Watch tool here, we can see that the pricing has changed dramatically. We are now at a 67% chance of a rate hold going into September's meeting versus if we just look at a week ago, right? Well, actually, let's look at a month ago, right? Because it's a little bit more dramatic. There was a 58% chance that we were going to see a rate hike. I mean, before this, there was even a 70% chance that we would see a rate hike. And it's just consistently started to come in lower and lower. And the chances of a rate hold have consistently moved higher. So that's why I am on the bearish side of US dollars, and I'm buying euro dollars, right? Because it makes sense to me that if we are going to see a continued sort of hold here, then there is a good possibility that we will see, that kind of continuation of that US dollar weakness, right? So that's what I'm looking for here when it comes to the trade there, looking for that bullishness over euro dollar, okay? So let's get into the topic of today. So the topic of today was talking about an easy trend following strategy, right? It was how to trade the trend. And the thing with trading trends and things is it's very difficult for the market or for somebody to jump into trading and then kind of get involved with the markets. And because there's so much information out there's so many different sort of things out there to suggest that you should be doing day trading, you should be doing trend following trading, you should be doing swing trading. But the thing is, you have to do what's right for you. And it all comes down to how much time you can implement into this and how easy you want to make it for yourself, right? Now, with swing trading, obviously, it is easier to implement, but you take longer to get results that you probably want. But I'm going to show you a really simple trend following strategy today that I use, and it's what's helped me enter this Euro US dollar position currently, right? So, first of all, we need to find a trended market, right? That's the aim of the game here. The aim of the game is to find a market that's going to be trended. And an upward trend is when a market is making higher highs and higher lows, and a downward trend is when it's making lower highs and lower lows, right? So first of all, we need to identify this kind of price action on charts. Okay. Now I have a simple tool over here which shows me where that's happening, right? Because I look for weak currencies against strong currencies. Okay. Now looking at Euro US dollar, if I just go up to the daily chart here, okay, you can see that the market is starting to make higher highs and higher lows. We were making lower lows, lower highs, right? So we were bearish through this period here, okay? And now that's changed. The market has consolidated, broken out of that range, and is moving high. Okay, so consistently, I'm looking for bullish movements because the market is making higher highs and higher lows, right? When we go to the 4-hour chart, we can see that the market is making higher highs, higher lows. I'm still working within this area here. Okay. So we haven't created a new lower low. We haven't closed below the previous low. So I'm still bullish. I'm still looking for long opportunities. Another thing I like to factor in is where the 50 moving average is, right? Price is trading above that 50 moving average. So that's a good thing to look for. So how did I take this trade? So the simple trend following strategy is this, right? I'm just going to click on template. Let me just go back to this one. I'm just going to go indicators list. Okay, I just need to add insert. Because I'm on my laptop today, I'm not on my main computer. Okay, let's insert indicators. There we go, right. So simple trend-based strategy. Once I have every other time frame aligned, I'm looking for a couple of different factors, right? I'm looking for the stochastic to be in an oversold condition, going back into sort of a bullish condition, and I'm looking for price to close above the 50 moving average. Okay, so that is the situation we had over here. Okay, market come back down into the moving averages. Okay, it consolidated, it closed back above the 50 moving average. So I've entered my long position here, put my stop losses below the low. Now, yes, there were signals before this. You had signal here, you had signal here, right? But if you put a buy stop on this one, wouldn't trigger, okay? If you put a buy stop on this one, yes, you'd be in the position and your stop loss would be where it is now. So you're still technically in the trade and you're still technically in profit right now. I just missed that position, right? So the market moved lower. Um, but I'm looking for continuations now. The market has broken out and is pushing nicely to the upside. For now, might change obviously, but market is pushing to the upside. Let's look at some previous examples. Let me just open this up a little bit because previously we were talking about, being short on the market, right? So if I go back to that daily chart, throughout this period here, really, the market made a new low here, right? So if you look at that daily chart, the market is making lower lows, lower highs, okay? So what I'm looking for there is continuations to the downside all the way down to sort of here, okay? So if I go to the 4-hour chart and we have a look at what price has been doing throughout that period there, we can see that we have a couple of interesting factors. First of all, we have a crossover of the 50 and the 200 moving average. Okay, price has come down. It's come back into the moving averages. We go into that overbought condition. We start coming out of that. That could be our short position there. Stop losses either above the 200 moving average above previous swing highs. Now, depending on where you put it, you might get stopped out, but then there's another signal here, right? Market comes in, closes below the 50 moving average. There's our short. Stop loss above the high of the condition there. Here, market comes in. That would be around this area here. Sell below those low, stop losses above the highs. Market drops to the downside. Okay. So you have multiple different opportunities here, right? Aggressive. This is quite a large stop loss to have if you're putting your stop loss above the 200 moving average. But still, right? And at this point, conditions were starting to change because we were going into a sideways market. But essentially, what we're looking for is if our daily is making lower lows and lower highs, we're looking for price to turn back into the pullback phase, into the impulse phase, okay, which are these moments in here. And what we really need to figure out is when does that happen? It's when we see changes of trend. It's when the market starts to make new lower lows and lower highs again on our middle time frame, right? And then we can start implementing lower time frame trends and opportunities, okay? Because you can see here, right? Market is making higher highs and higher lows again until we get that head and shoulders pattern. So the next element is to look at where is it best for the 4-hour chart to be in line with the daily chart. Well, it's this area here, okay? And it's this period throughout here, okay? So if I then use a 3-step method and then go to my hourly chart, just zoom out, put it back in here. I can say to myself, well, I'm going to look for hourly trades within this section instead. Okay, so you have this opportunity here, right? An opportunity here, potentially an opportunity there. Market then changes trend. So you're waiting for a breakout. Market comes back in. Opportunity here, opportunity here. Market starts to make new higher highs, higher lows here. So we're waiting for that condition to change. It doesn't change. Market then just goes completely sideways at that point. So what I'm looking for essentially is when that market starts to change trend on the daily chart, we're looking for the daily chart to start changing. Then we want our 4-hour chart to agree with that, okay? And then we're looking for our hourly chart or 30-minute entries, okay, off the back of that. Now, if you want to find out more about that, I actually covered this in depth on the Anzo YouTube channel. So if you go to Anzo Capital YouTube, okay. If you're on our YouTube channel right now, you can find this really, really simply. Just go to live, come all the way down to master multiple time frame analysis. Here you can see I break this down into real clear explanations of how you can develop your own trend-based trading strategy, and I go through swing trading, day trading as well. So I'm going to leave it there, guys. Thank you for watching today. Hope you enjoyed it. If you did, leave it a thumbs up, subscribe if you're new around here, and I'll catch you in the next one. See you next week, guys.
On the court or in the markets, performance is everything. That's why Anzo Capital is helping to power your trading game. Now official partner of the Phoenix Suns.